Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Ryan Gerdes, and one of our besties in the entire world. Not only do we love to have cocktails with her and hang out with her, but she saves us tens of thousands of dollars every year when it comes down to the IRS. And everybody's got their own personal feelings about the IRS. Whether you like them or you don't. I just don't want them to have more of my money than they need to. And so we are in studio with Cindy Dillard Brady now. So congratulations on your most recent nuptials. And so, Cindy, you are you're our accountant, okay? But at the end of the day, your greatest value to us, and we always refer to you as our tax strategist.
Yes.
And you have saved not only Ryan and I and our team of real estate wealth managers, but our clients thousands and thousands of dollars. So welcome to the big show. So let's jump into it because we have a lot of investors that listen to the show, that they own businesses, they have investment properties, and this really is your area of specialty. But tell us a little bit about your business first and kind of who you are and what you, when you wake up in the morning, what is it that's on your mind and what are you passionate about?
When I wake up in the morning, I love taxes, and it's tax season. And the more I can help people learn what they don't know, the better off we are. So I started my business 25 years ago because I didn't know what I didn't know. And I had turned my main home into a rental property. I had a business, and I had a W-2 job, and my guy said I didn't have any deductions, and I thought I better figure out what I don't know. And I learned what I didn't know, and I wanted to move to Arizona and teach the masses. That's why I'm here.
All right. So one of the greatest takeaways that I got, and you're going to want to go ahead and text the word tax to 623 AZ RECON. That's tax to 623 AZ RECON. We're going to send you Cindy's information, and you can have your own conversation with her and the team. When we hear the word IRS tax code, it sends shivers up our spine. Like we have this perception that the IRS tax code is our enemy, and IRS agents are our enemies. And you taught me that the IRS tax code, because we're business owners and we're investors, really is our best friend because it's the code, it's the guide to helping us understand how we can keep more of our money.
Yes, and how to legally maximize those deductions. If you follow Robert Kiyosaki with Rich Dad Poor Dad, or his CPA that travels with him, Tom Wheelwright, that's what they talk about. They talk about good debt and bad debt. Good debt is having an investment property and financing that property. And how do I legally maximize those deductions to put them on my tax return and to offset that W-2 income? So what I like to teach my investors is, how do I make my investing into real estate tax deductible? How do I offset that W-2 income?
So for me, one of the biggest pain points has always been, we want to stay out of trouble, right? And so, what's the ultimate trouble you can get in is getting audited.
Yes.
And so when I talk to a lot of people, whether or not they're investors or if they're W-2 employees, that they say, I want to make sure that my tax consultant or my CPA isn't going to get me into trouble. So what are some myths, or what are some things that people are doing that they're either missing the boat on, or that they just should be doing instead of the good old-fashioned way? Because, as you said, tax code changes all the time.
So I think some of the myth is thinking that they're going to get it audited, right? How I do your taxes is I look at the national averages for the industry that we're doing. So if it's a construction company, I'm going to look at what the national averages are. And unfortunately, the IRS hasn't changed their categories. And so they don't know what Google AdWords or some of those things are. So I'm going to look at it when I do your taxes and make sure we're within line of what the IRS is used to, right? So it's going to be looking to see, how do we keep you out of an audit? Now, I've been fortunate enough, the few audits that I've been to in the past, I haven't had any recently, but in the past, and I talked to the IRS agents and I said, so what is it you're looking at? So this is where investors might get a little concerned. So if you have a high W-2 wages and then you're claiming a loss on a business, that would be something that they would say would be a red flag. But how do we do that? Well, then we're going to make your rental properties and put them in a partnership. That does two things. That one protects them legally for asset protection, and then two, puts it on a separate tax return so it wouldn't be so highly audited. I don't know how you can know. I guess communication with your accountant. Why are you doing that? I have clients that ask that. Or I had a call the other day and I said, okay, I'm going to call you as soon as I'm done with your tax return so I can go over the things that we did, because she didn't know. She's a doctor and she doesn't know, and she's now doing telemed. She just doesn't understand the taxes, right? So I'm going to go through them and tell her so she knows. So something I've been big on lately is trying to educate you as a taxpayer what I'm doing so you know. So if, God forbid, I was in an accident or something, you know what I've been doing, because we're going to keep doing it the same.
And that's one thing that I really appreciate is the communication part, especially my wife, because, I get some of these things back and I'm like, I don't know, some of this is Japanese to me. But then Christine is doing a lot of our books. And so when she said, well, this number isn't lining up over here, the fact that you and your entire team, which is what I'd love for you to talk a little bit about too, is the role that your team plays in your guys' business, and how you guys are able to handle these things, as more of a conglomerate rather than just a one woman show.
Yes. And that changed a few years ago when my daughter's husband came to work for me, Blake, who is a CPA. And what I realized is I have a pretty good memory, and I was pretty good at keeping it all with me. And then I thought, gosh, I need to teach more of this. I need my staff to know. So I have a great staff. We're great at responding. Everybody in our staff has a different role. What we just started doing is sending out a picture in their role so you can know. It's funny because one of my clients, I had a call right after that went out, and she said, oh, okay, now I can see what everybody looks like, right? Some of them work remotely. We have a physical office in Phoenix that we all still show up to, but I do still have a whole group that work remotely. And my goal is to respond with you within 24 hours and get an answer to you.
All right. If you'd like some more information on how to reach Cindy, all you got to do is text the word tax to 623 AZ RECON. That's tax to 623 AZ RECON. You mentioned letting us kind of know what you're doing. When was the last time I ever asked you of why are you doing something? I just tell my wife, Cindy said we're doing this, and my wife's like, yes, okay. I don't ask.
You're right.
I just do what I'm told, right?
Right.
But I think that example, when you first started with me is like maybe year two, you got an email, and then you asked a question, and then we jumped on the phone.
Yeah,
You and your wife
absolutely.
and I jumped on a phone. We talked about it, because you don't know what you don't know. And if I'm not asking the right question, you might not know what I'm asking, right? So I tell my staff all the time, pick up the phone, jump on the phone, ask them. Several clients have my cell phone number. I don't mind, as long as they realize I like to see clients. I'm in front of clients. I'm off doing other things with clients. So if I don't get back to you from a text, an email's always good. My staff is excellent. They've been with me for a long time. They'll get back to you, and most of them know the answers.
Well, I want to get into some tips that we can do and we may not know about. And I remember the first time I met you, you explained to us this concept of paying our kids. And at that time, it was $12,500
Right.
a year. And I'm like, when you were done, I'm like, gosh, she's crazy. I went home and told my wife that. My wife's like, she's crazy. Like that, something's weird about that. And so we actually Googled it. We're like, holy crap, we've had accountants over the years and didn't realize like this was a legitimate thing, part of the tax code. And then I just didn't even want to know how much money I left on the table because I didn't have the right accountant.
Mm-hmm. That's probably the one biggest things is, so the IRS allows you to pay your children age 7 to 17, age-appropriate jobs. You have them keep a timesheet. You have them set up a bank account. You don't run it through payroll and pay Social Security and Medicare. And so you're keeping the amount that you're paying them under the standard deduction amount, which for 2024, it was $14,000. So then it'll go up for 25. So every year it changes. Now, what I want you to think about with that, though, because some people, just like Mike said, I'm not paying my kids $14,000. Like, what am I going to do with that? Okay, what I want you to look at it is, how can I pay my kids and then have the kids pay for their activities? When Chelsea was younger, she paid for her own dancing. Then she paid for her own driver's ed. And then insurance on a girl in Arizona, so she had to pay her own car insurance. That's what came out of that 14 grand. It wasn't 14 grand then. It was like 6,500. So it all came out of Chelsea's account. She paid her own stuff.
All right. If you'd like some more information, go ahead and text the word tax to 623 AZ RECON. That is just one of the tips that can truly save you thousands of dollars in taxes.
And I don't want to make any like slave labor, like child labor jokes, even though I want to. But what I do want to touch on is the Augusta Rule,
Yes.
because for our investors out there, they're always looking for ways that they can not only invest more, but save more, and then also, for a lot of our people, they love to have those Airbnbs and enjoy some of those properties that are out there, and kind of have their cake and eat it too.
Right. So the IRS, it's called the Augusta Rule from the golf tournament in Augusta. And the IRS says that if you rented out your home for 14 days or less in a year, you don't have to claim the income. So we're pretty confident some congressman had a house in Augusta and didn't want to pay the taxes, right? Because he rented it out. So what I tell my clients, every client should be claiming the Augusta Rule as rent. You have a lease agreement. You can do fair market rents in the area or hotel prices. The beauty with Google is that you can see what the rates are right now. So fair market rents in the area. The beauty of Arizona is we have high rents, Christmas, New Year's, and then all of the spring months. So it's always a great amount that you can claim that you can take out of your company tax-free.
All right. So for a lot of our listeners and a lot of our clients, a lot of them have W-2 jobs, not necessarily just business owners. Obviously, business owners, and when you own a business, things are a lot easier to conceptualize on paper when it comes down to deductions. But many of them are W-2 employees, whether they're some of our F-35 Luke Air Force Base, buddies out there at Luke, or just other people. But they've got great W-2 jobs, but they're buying investment properties. What tips, what strategies, because not all of these investment properties, they haven't put them into LLCs. Is there the benefit to putting into the LLCs? And how do I just once I have an investment property, a rental property, how do I start maximizing deductions?
So one, you're going to create an LLC with a generic name that we're going to file as a partnership. And that will flow to your personal return. And then, so if we have an oval and it's our partnership and it's an LLC, Cindy Dillard LLC, right? And it's filed as a partnership, then every property is going to have its own LLC. Now, I do want you to talk to your attorney and make sure that's all kosher. This is how I want it to flow for the tax return. I'm going to file one tax return. So I have a client who's got 27 properties. The beauty of this is he only has to have one checking account. I file one tax return on the 27 properties. I don't have to file 27 returns. That's not what his guy told him. He said, you have to have a checking for every one. And he's like, okay, but how do I do that? Okay, so then I want you to think about how you're doing your expenses. So if I buy a lawnmower that's for these two properties, I'm going to claim it as a business expense on the general up here, right? Everything's still going to stay the same for each property. Income, expenses, property taxes, insurance, and mortgage interest. Then from there, what are you doing to operate your business? You're using your cell phone, you're using your internet, you might have bought a laptop. Any of those expenses are going to be general expenses up under that umbrella that I'm going to claim as a deduction. That's going to help offset your W-2 taxable income. And I have lots of pilots. I had one who just didn't even know where to start. And so we first did a property and we set it up, and then he could see what he saved. And your first year of savings is between 15 and 20 grand.
Wow. So, I'm brand new to either owning a business, or I'm brand new to investing in real estate. One of the biggest concerns or questions that we get is, well, I barely got approved, and I don't expect you to be a lending specialist, but I barely got approved for the house that I'm living in. We've saved up a little bit of jack. We, might have gotten a promotion over the past year or two. How can Cindy help me get approved on the tax side to having more income so that I can buy that next investment property, or I can convert my current home into an investment property and buy door number 2 for us to move into? Talk to us a little bit about what that looks like.
And in addition to that is the term jack a line item on a tax return?
No, it's not. And I like to talk to the lender. And so I always say to my clients, let me talk to the lender. Let's get the three of us on the phone, because what the everyday person doesn't know is anytime you have a depreciable asset, it's an add back. So that's not going to go into your income. So we're going to make sure as much as I can be on your depreciation line so it gets added back, so then you can qualify. And then as I'm doing your tax return, and the way I do your return, a rental property counts as income if it's showing a positive cash flow once we add back the depreciation. So I can still expense it, but that goes back to the furniture and fixtures. If I depreciate it, if I have a cost segregation, all those get added back when I go to do qualifying. Does that answer that?
Yeah, well, in addition to that, then, a lot of our listeners and a lot of our clients are 1099 employees. And so what we find, because we are 1099 employees and we work with a lot of real estate agents who are, we focus so much on deducting absolutely everything. And then when we go to try to qualify for a home, even though we've made a lot of money, but we've deducted so much, now all of a sudden we can't qualify.
Yeah, we're all trying to show a loss, right?
Yeah.
Not pay the IRS, right? So it's a matter of, where do I have the numbers? And fortunately or unfortunately, lenders are all different. So if I can talk to them, where do they like to see the numbers? So whether it be on a W-2 or just the profit of the business or a positive cash flow from the rental property. So there's a couple places it can go. And depending on how the lender wants to see it, is just how I can put it on that tax return. Because then we're still maximizing. We might still be maximizing that. And the beauty of our tax rates right now is, I just had a gal, I think her income was $180,000 and owed no taxes. I think they have a couple of kids, but okay, that's amazing. Like, that's been a long time since we've had $180,000 of that was their income. Yeah.
All right, let's, as we wrap up, let's kind of get into the process. And again, if you want to have a conversation with Cindy and her team, all you got to do is text the word tax to 623 AZ RECON. And you operate a little bit differently, because there's a said fee, and we pay a monthly retainer, which I like to refer to, which I personally love, because then I don't feel bad about emailing you or calling you with questions. So the one thing I love, though, every year I sign the contract, I check a little box, costs me a little bit more, but it's basically saying, in the event that I get audited, I am not really going to have to be talking to the auditors. And like, that's what I want. But talk about, because who knows?
It's audit protection.
I may not be able to walk out of that audit without handcuffs, on my wrist. But talk to us about the process. So they're going to text in tax to 623 AZ RECON. We're going to give our listeners your phone number. What happens?
And then I'm going to have you communicate with either Myra or Debbie at the front desk, or Judy. She's our concierge, our customer concierge, and she's going to tell you our fees, how we operate. It's on a monthly fee. So clearly, this is 2025. We're doing 24 taxes. So you haven't paid yet for 24. So if I'm doing your 24 taxes, you'd pay for that fee. And then we'd set you up on a retainer for the monthly for 2025 tax return. And then she sends you a video. It just talks about what I'm doing and how I do it. And yeah, you can email us anytime. And we're good at what we do. And I love what I do. And we are good at communication.
Is there an opportunity if I, let's say, and not me, because we've been working together for years now, but I'm a listener, I've got to work on my 24 taxes, but I'm thinking, boy, I might have paid the IRS way too much in 2023. Do you guys come in and take a look at that and kind of help do some adjustments?
We do.
Or if somebody else may have missed out on a couple of opportunities that they've been working with before, do you take a look at those too?
I will look at them. I'm more apt to, I do want to look at them, but I'm more apt to make sure I'm teaching you how to save the money from here going forward. Now, if it's from moving your LLC to be taxed as an S Corp from a partnership, I'm absolutely going to do that if I can go back and do that and there's still enough time. Because what I'm always thinking of is I'm trying to save you penalties and interest. So S corps, partnerships, they all have penalties and interest if you don't file by a certain time. I'm going to make sure we're within those guidelines, or I'm just going to leave it and say, okay, let's just go forward and let's legally maximize all these deductions now.
All right, Cindy Dillard, thank you very much for spending a few minutes with us. Cindy Dillard Brady, my
Yes.
apologies. If you would like some
We're all
more-
adjusting.
It just happened.
If you would like some more information on how you can reach Cindy's office, all you got to do is text the word tax to 623 AZ RECON. That's tax to 623 AZ RECON.